There's so many times that people kind of get a little bit confused on what's the goal, right? Is the goal to build up a bunch of money, have it in an account, and then withdraw money out of that, plus, and or the just the growth, and hope that you don't run out of money, kind of the retirement model? I really don't think so. I think it's really about financial independence and passive cash flow and tax savings. And all of those things are so much more important than trying to build some big lump sum of money to live off of and do nothing, right? And it's really, in my opinion, a bad idea to let the government control that. Anything the government controls in the history of the United States just hasn't really worked out for who's putting their money there, right? And we can go through a lot of examples, but let me share my screen and go over something just really simple and and show you kind of what I mean. Okay, so let's say that, and I'm gonna these numbers are just estimates, they're averages, whatever they are, right? If if we put $100,000 in an insurance, a specially designed insurance contract for infinite banking. And let's say we didn't put any term rider on there at all. We just put it into a, like Nelson in Nelson Nash's book, Becoming Your Own Banker. 60% of it will go into the PUA, 40% will go into the base whole life policy, right? And we have a great video. If you're not familiar with PUA and all of that, we have a great video kind of explaining that. Okay. But you put in 100,000 and let's say I have 62,000 to use. And I'm going to take that 62,000 and I'm going to go to the bank and I'm going to say, hey, I've got $62,000. I want to use some of your money and I want to go buy a property. Okay. So let's say the property is 300,000. So I'm going to use $62,000 of the insurance company's money, the rest from the bank, and I'm going to get 25% cash on cash return. Okay. Or I could say 5% or thereabouts, around 25%, because it's 62,000 instead of 60. But let's just say I'm going to cash flow $15,000 from this property. Okay. Well, what am I going to do with the $15,000? Well, I'm going to put it back in my banking system. So now I have $15,000 sitting over here. The next year I put in 100,000. And let's say that I have 100,000. Some of the policies that we use are that efficient. The second year, it's dollar for dollar, right? If you're a female under 50, it might even be a little bit more than $100,000, right? Dollar for dollar. Well, I have that 100 grand, plus I can use my 15 again, right? Over here. So I have $115,000 to go buy another property. I'm going to go to the bank. Let's just say I could get 80% loan to value, LTV, right? I'm going to buy something for about $500,000. Okay. And let's say I'm going to get 5% net after debt load from here, and about, again, 20 some percent cash on cash. So let's say it's $25,000. Right. So flowing back to my banking system is the 15 and the 25. So I have $40,000 back in my banking system. By the way, that means the base premium of this insurance contract from here on out is covered from just these two assets. Make sense? All right. So I'm going to capitalize again at 100,000. And let's just say I'm going to have a little bit more than 100, but let's say I have 100,000 to make the math easy, plus the 40. I have $140,000, and I'm going to go invest that in a $700,000 property, and I'm going to get 25% cash on cash, or $35,000 from my 140 in, right? This is my 25%. And it's, 5% of the total property. So now I have 40 plus the 35. I have $75,000 flowing back into my banking system. All right, let's do it one more time, just so that we make sure we've got this down. The next year I put in 100,000. Let's say I have 105,000 to use because now I'm going to start to leverage, right? Plus I have my 75 flowing in from this property and this property and this property. So now that 75,000 is in there. I have 180,000 and I go buy a $900,000 property. I'm going to have $45,000 if I'm still 25% cash on cash, right? Plus my 75. So I'm going to have $120,000 flowing back to me. By the way, now my banking system can't even hold that. So what do I need to do at that point? I need to expand. But in 4 years, I created $120,000 of passive revenue. Now, the really cool thing is all the money that I have in here in the insurance contract, I can get to 0% tax. All of these properties that I have, 4 properties, have tax advantages, depreciation while they're appreciating. They have cash flow. So I have rate of return on my growth. I have rate of cash flow. I have rate of return inside the insurance contract, and I get both. Now that's 4 years. And if you say, well, Jim, I can't get 25% cash on cash. I just worked with a young guy. I'm 55. So anybody in their 30s is a young guy, right? And his portfolio is 27% cash on cash. So I think it's in the right ballpark. Okay. But if your business in your area, if this isn't real estate, if it's businesses or whatever it is, and it's a little bit slower, I just showed you a way to be financially independent if your lifestyle could be supported at $120,000, but I just showed you 6 figures of passive income in 4 years. Now, think about this. How much money would we have to have in a 401k or something like that to produce $120,000 of income? Well, if we use the Monte Carlo method, it would say that we can withdraw between 3 and 4%. Okay, so at 3%, all right, that's $4 million I'd have to amass. That takes time because the government just doesn't let you put as much money as you want to in that 401k. And Wall Street gets their piece, right? And their expenses inside of the 401k. So really, I haven't seen very many 401ks that have $4 million after 20, 30, 40 years of investing. And here we did it in 4 years. This is part of the power of infinite banking for cash flow, advanced infinite banking. There's a lot of people on the internet and they're talking about the paying off, the type of infinite banking where you're paying off your cars and your student loans and all of that. And that's great. And, you should do that. But at Create Tailwind, we can take you to the next level, which is how to build this. Right? So go to createtailwind.com. There's a button on there to schedule a free consultation. It's not a sales call. We're just going to show you more like this or watch some of our other videos, see if you like us or not. And then schedule a time to meet. And you'll meet with one of our people and one of our counselors, and they'll show you how you can do this and become your own banker and how you can chase financial independence and catch it instead of chasing some pipe dream of retirement. By the way, the definition of retirement is to be taken out of service. I don't think any of us want to be taken out of service, right? All right, until next time, I'm Jim Oliver. Thank you for watching, and we'll bring you some other materials that are hopefully going to help you along your path of financial independence.